All right, welcome to The Explainer. Today, we are diving deep into a book that completely changed the game for personal finance, Robert Kiyosaki's Rich Dad, Poor Dad. We're going to break down the core ideas that have shifted how millions of us think about money. And this quote right here, this is pretty much the entire book in a nutshell. Kiyosaki's whole argument is that our schools train us to be great employees, but they totally drop the ball on teaching us anything about how money actually works. And he explains this whole idea through the really powerful story of his two dads. So, growing up, Kiyosaki had these two really important father figures in his life. But the thing is, their advice about money, about your career, about life, it was completely opposite. This basically forced him from a young age to make a choice about which path he was going to take. Okay, let's really get into this. On one side, you had his poor dad, that was his actual father, a super educated guy with a PhD who did everything by the book. Then you had his rich dad, his best friend's dad, an entrepreneur who dropped out of school but went on to build a financial empire. And their worldviews couldn't be more different, right? One dad says, find a good company to work for. The other says, find a good company to buy. It's a massive difference in perspective. So, Rich Dad's very first lesson wasn't even about how to make more money. No, it was about something way more fundamental. It was about seeing this invisible trap that keeps most people working their entire lives but never really getting ahead financially. He had a name for it, the rat race. So, what's actually powering this trap? Well, Rich Dad said it all boils down to two really powerful, really human emotions. First, there's fear. The fear of not being able to pay your bills, right? That's what gets you out of bed into a job every day. But then, as soon as that paycheck hits your account, a different emotion kicks in. Desire, or what he calls greed. And you start thinking about all the cool stuff you can finally buy. And that right there creates this endless cycle. You get up, you go to work, you pay your bills. And what happens when you get a raise? Well, your lifestyle inflates to match it. You get a nicer car, maybe a bigger apartment. But that just means you have to work even harder to pay for it all, and the whole cycle just starts over. You feel like you're running faster and faster, but you're stuck on a treadmill, not actually going anywhere. Okay, so if the rat race is the big problem, what's the escape plan? How do you actually get off that hamster wheel? Rich Dad's solution is this one incredibly simple, game-changing rule that is the bedrock of his entire philosophy. That's it. That is the number one rule. And it sounds almost too simple, doesn't it? But Kiyosaki is dead serious when he says that most people struggle with money their entire lives simply because they don't truly get the difference between these two things. To make this super, super clear, Rich Dad just cuts through all the complicated financial jargon. He boils it all down to one simple thing: cash flow. An asset is anything that puts money into your pocket, period. It's that simple. Think about it. Cash is flowing from things like a rental property or stock dividends or interest from bonds, and it's flowing directly into your income column. That asset is literally working for you, making you money while you sleep. And a liability? Well, you guessed it. It's the exact opposite. It's anything that takes money out of your pocket month after month, year after year. With a liability, the cash is flowing away from you. You're constantly paying out for your mortgage, your car loan, your credit card debt. These things don't build your wealth, they drain it. And this right here is the key insight. It's a fundamental difference in what people do with their money. The wealthy focus their time, energy, and capital on acquiring assets, things that will make them more money. Everyone else? Well, they tend to spend their money on liabilities that they think are assets. And that's the trap. Now let's take this idea and apply it to what is, without a doubt, the most controversial part of the whole book. This is the one that really gets people fired up because it goes against everything we've ever been told. So the book basically throws down the gauntlet and challenges this sacred belief that your home is your biggest and best asset. Kiyosaki says, hey, let's just take the emotion out of it for a second and look at it purely from a cash flow perspective. When you really look at the house you live in, which way is the money flowing? It's almost all going one way, out. Every single month, you're paying the mortgage, property taxes, insurance, repairs, utilities, the list goes on. So by Rich Dad's very strict definition, your primary residence functions as a liability. This isn't just about accounting. It's a direct shot at the entire cultural dream of homeownership being the safest path to wealth. So, if getting a bigger salary just keeps you spinning in the rat race and buying that big dream house is actually just buying a big liability, what in the world are you supposed to do? Well, that brings us to the next big lesson. Mind your own business. This story just nails the concept perfectly. Sure, Ray Kroc's profession, what he did day to day, was selling hamburger franchises. But his real business, the thing that was actually building his massive fortune, was acquiring all the valuable, income-producing land that those McDonald's restaurants were built on. And that is the distinction we all need to make. Your profession is your job. It's how you earn a paycheck to cover your expenses. But your business is your asset column. Minding your own business simply means you use the money from your job to buy assets that will generate even more money. You know, Kiyosaki learned this lesson firsthand as a kid. Rich Dad made him work for free, which was brilliant because it forced him to stop thinking about just getting a paycheck and start looking around for actual opportunities. He noticed a store was just tossing out old comic books, so he collected them, set up a little library in his basement, and started charging the neighborhood kids 10 cents to come in and read. Just like that, he had built his very first business, a true asset that made him money whether he was physically there or not. For the first time, his money was working for him. Look, at the end of the day, this book isn't really a step-by-step guide on what stocks to pick. It's about changing your entire mindset. It's meant to make you ask completely different questions about money. So instead of just thinking, how do I get a raise, it forces you to ask, how do I build my asset column? It challenges you to stop just working for money and to start making your money work for you. So I'll leave you with that question. What business are you minding?